Folks, we need to go over what happened on Fed Day. We want to talk about existing home sales. I also want to share with you an opportunity that was brought to me yesterday in Las Vegas. We could talk about what's going on with the Fed and expectations, get some earnings announcements, just lots and lots of stuff going on for your daily financial news. Folks, first, we're going to spend a lot of time on the Fed, but I just want to share this with you really quick. Nailed it. What did I nail? Earlier in the week, we've got receipts on this channel. We talked about existing home sales. Existing home sales were just reported a minute or two ago. And again, last month was 4 million. Expectations were for them to fall 3.95. And I told you, and we have receipts on this channel, that it was going to be a blowout number. Folks, 4.38 million. I'll say it again, 4.38 million. Folks, we talk to agents every week on this channel. We talk to investors every week on this channel. It was very clear that the experts didn't have a clue what was going on in the housing market. The housing market for the month had rates in the 6s. Obviously, they went up to the 7s. But again, it is crazy out there. It is crazy. You have heard folks like Beth and Adrian and Omar and Jason and on and on and on tell you about multiple offers and things of that nature. So once again, the experts were wrong and we got it right here. I am wearing my green swing and a miss shirt. You can't quite see it. But I feel like I missed the Fed yesterday. The Fed, in my opinion, had an opportunity to prick the stock market, to slow down things, and they missed it. Now, maybe they see something behind the scenes that forced them to be more hesitant or cautious. They just weren't, right? So what happened and what surprised me? One, I'm shocked that at least one Fed president did not anticipate going higher. I think that is almost criminal. Now again, I don't think they will go higher. But not having one Fed president say, you know what, it's possible, is unfortunate, in my opinion. This was an opportunity missed. That is only the first of several misses. That's why I am wearing the swing and a miss shirt, because I got it wrong. The second thing, the Fed, by a narrow margin, held on to 3 rate cuts in 2024. Not only did they get 3 rate cuts in 2024, they also raised their inflation expectation. It was 2.4, it's now 2.6. They raised the GDP expectation from 1.4 to 2.1, and they lowered unemployment from 4.1 to 4. So rates are where they are today, and the economy is getting stronger. And you don't have somebody with the guts, the balls to say, hey, we may have to go one higher. I don't know. It was an opportunity missed. Again, I didn't like the dovish stance. It's almost like they see a boogeyman out there and we just don't see it. And again, I'm not saying that we had to go higher. I just wanted the threat. I wanted the market to have the threat of going higher. Also, it looked like only one Fed president had the guts to say no cuts in 2024. Every other Fed president had at least one rate cut. And this is how it broke down. So again, two no rate cuts in 2024, one no rate cuts in 2025. So 2 no rate cuts in 24, 1 no rate cut in 25. 2 Fed presidents said 1 rate cut in 2024. 5 had 2 rate cuts in 2024. 9, this is just a very narrow margin, 9 had 3 rate cuts, and on the other extreme, one had 4 rate cuts. So the spread from 2 having 0 and on 1 having 4 gives you the balance of 3 rate cuts by the narrowest of margins. I don't get it. They had a chance. They knew the dot plot was going to be combed over. They look at the dot plot every quarter. They could have sent a message and they missed it. So what are they saying right now? 3 rate cuts 2024, 3 rate cuts 2025, 3 rate cuts 2026, followed by 2 additional rate cuts, bringing us down to about 2.25 to 2.5, the long-term Fed funds rate that they are aiming for. The other thing they kind of stated in the Fed announcement, hey Freestyle, how are you? Appreciate the super chat. Very, very nice of you. It was a mistake. The Fed meeting was a mistake. They had the opportunity to take a little steam out. I think this is how wild this is. This is wild. We just talked about pending home sales at the open. Blowout number, 4.38, where the experts were sub 4. What is going to happen by Friday, by tomorrow, in my best guess, is we will once again be below 7% mortgage rates. Folks, I want us to stay above 7 so we can slow this market down. We can get to the other side. If rates go sub 7, we already know with evidence what is going to happen. Look at February existing home sales. You get a blowout number sub 7. And again, given the Fed's dovish stance and 3 rate cuts for 2024, my guess is we are below 7 by Friday, tomorrow. I don't know what to say. It is pretty crazy. So I want to catch you up. So over the last week or so, you've heard me talk about buying a rental property in Vegas. It is a project called Buying Vegas. I've talked about giving a 1% bonus to real estate agents, things of that nature. I want to shout out Tammy and Seth. Yes, folks, in less than a week, I have already had a Las Vegas agent reach out to me and say, Michael, I think I have a seller finance deal that you should look at. So without giving too much away, I can say that the seller is looking for $600,000. They are looking for 30% down. They are offering a 5% 1-year interest, and those are the details. We have gone to the property. We've looked at it. Our offer back to the seller is going to be $550,000, $100K down, 4% interest for 5 years. We want to keep the payment at $1,500. Again, we are likely far apart. I don't know that this goes anywhere, but I just wanted to show you that talking about your market, talking about what you're looking at, having a community, opportunities can come. So again, I'll keep you informed if this goes anywhere, but it looks like there are seller finance opportunities out there. I want to shout out Seth and Tammy for reaching out and doing the work. So thank you very much. If you are a real estate agent in Vegas and you have one of those properties that's languishing on the market, it's not updated, it's whatever, reach out to me. Maybe there's a deal that we can put together. If you're a Las Vegas real estate agent, let's talk, let's communicate, let's see what's what. I would love to get some deals going. Let's talk about Darden Restaurant. Let's talk about Darden Restaurant and Keurig. Darden Restaurant had same-store sales fall. Are we seeing the breaking of the consumer right in front of us? Again, Darden Restaurants, same-store sales down 1%. First same-store sales down since the beginning of the pandemic. Yes, folks, maybe the consumers are staying at home. On the luxury side, there is a luxury French conglomerate called Keurig. Think, I didn't write it down. I think it's it's Gucci. Gucci is the brand. They are estimating a 20% fall in luxury sales, basically focused on Asia. Again, folks, if we are seeing the well-to-do pull back and really a 20% drop being quite significant, are we just seeing more and more consumers be nervous and scared? We are a consumer-driven economy, and a scared consumer does not spend. So again, very interesting. I want to talk about FHFA. You and I have talked about the housing market being broken. You and I have talked about the move-up buyer basically not functioning. The FHFA has done some research on this and is the first institution to put out some numbers that I think are interesting. They are estimating that because of the gap in rates, right, 80% have rates below 6, we're currently over 7, that it has prevented 1.33 million sales. Basically, they're saying if rates were lower, it would have transpired to an additional 1.33 million. I have to tell you, I think that's understating. Because again, remember, what did we do? We broke the move-up buyer. And most move-up buyers are sell one, buy one. So again, I don't know the analysis behind this number, but I just feel like it's underreported. If we had rates at 5%, it would not shock me if we had 6 million home sales in 2024 instead of 4.2, 4.3. So again, very interesting. On top of that, they've done some additional research that said, hey, if rates fell 2%, they are estimating that even at that point, we would still be 13% below trend by 2030. Basically, they are telling you something that we brought to you with the 54-year spreadsheet. It's going to take years to break or to get back to a normal housing market. Folks, if you haven't downloaded the 54-year spreadsheet, I honestly don't know what you're doing. It is free on my website, onerentalatatime.com. You go there, you click a box, you put your email. The system should automatically send to you sent you a 54-year spreadsheet. So get it. It tells you what's going on. It is the thing that has allowed me to call the housing market correctly over the last 2 or 3 years. It's happened before. It's not the same, but it's similar. The trends are similar. Raise rates a lot, home prices don't fall, transactions fall. Now as rates stabilize and go down, transactions will take years to come back. It's all there for you. It is interesting. They also said if rates went 1% higher, so if they go from 7 to 8, for example, that increase alone would be enough to keep potentially 71% of sales below trend. Pretty wild to think about. Other things we got today, because it is Thursday, we got the weekly unemployment claims, and still the job market appears to be strong. 210. They came in at 210. Expectations were 212, and the estimate was 213. So again, the job market is strong. What else do we got here? I want to call it, I think I called it earlier, but I will call it again. Rates are going sub 7. Mortgage rates, 30-year, by Mortgage Business Daily or whoever reports that. That is my guess by close of business Friday. We have the first major economy in the world cutting rates. Yes, folks, it was just last week where Japan was the last country to raise rates out of negative. Now we have the first country cutting rates. It is already happening. Countries are declaring victory on inflation and cutting rates. Can you believe it? Folks, the first country to do it is Switzerland. Switzerland has cut rates 25 basis points in a surprise move. They are declaring victory on inflation, currently below 2% in Switzerland, and they are cutting. Now the market is expecting them to cut 2 more times in 2024. You might want to know what rates they were at. Switzerland was at a eye-popping 1.75. So they cut rates to 1.5. Yes, folks, we are at 5.25 to 5.5. So they are meaningfully below where we are and cutting. Pretty interesting to see that we are already seeing major countries cut interest rates. Pretty crazy. Anything else to talk about today? I think that's it. Again, I want to say that I missed. I'm wearing the green swing and a miss. I'm not sure if you can see it. Let's see if I can show you this. This is evidence. Swing and a miss. But we got the existing home sales right. The existing home sales barn burner, 4.38 million. Folks, if you want to be a part of One Rental at a Time, you can take the course, How to Get Started One Rental at a Time, for $3.99. You want to get a little fun from the Vegas event. You haven't watched it yet. You need to. It is listed for $199. You can use the ORAT50 for $50 off. And also something that not enough of you have done is I have given you the 10-week boot camp replay. 10 weeks going through buy box, deep dive, questions, 10 weeks. Actually, I think it was 11 weeks. I think there's 11 weeks in there. You can get that replay for only $99. Folks, if you want somebody to hold your hand through finding a buy box, asking questions, talking about what's possible, you can get all of that for only $99. That event, folks, was $1,000, and we had 42 or 43 people be a part of it. So again, if you need some hand-holding, you need some work on the spreadsheet, you need all of those, get the replay. I priced it at a silly, remarkable number of $99. Of course, you can get the buy box deep dive for $50, the stock stuff for $50, lots of stuff out there. So folks, have an amazing day. Have fun. Existing home sales blowing out. Shout out Seth and Tammy for bringing the seller finance deal. It is amazing. We will be signing that offer this morning. Keep it going, folks. Take care. Later.